So, calling Ryan from Bespoke Mortgage Group. So what's going on?
Bespoke.
Nima.
Ryan!
I love him.
How's it going, bro?
How are you?
Good. So we're actually recording an episode, and it's live. So we got a question for you. You ready for it? So Devany wants to know if the...
What's the default rate, Ryan?
What's the default rate?
Right now, yeah.
Like if,
He's like, what is that? So I guess it's quite low.
people defaulting on their mortgages. Do you happen to know? Hi everyone, and welcome to Reality Check, where we'll discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decision buying and selling real estate. Here with Devany,
Hi, everyone.
and we're in February already,
I know it's flying by.
and we're gonna discuss what happened in January, because January seemed pretty much a little slow, and we had some listings that we noticed that had a lot of activity.
A lot. Things are changing, guys.
Things are changing. I mean, you got to take notice of it. There are deals out there, and there's also some multiple offers happening again, which we've seen a lot of them, especially in the last three weeks. Yeah. So let's start with Market Watch and go through what's been going on in January. Let's start with the number of sales, which has been pretty low at about 3,100. And I think in the last 5 years, that's the lowest number of sales we've had by far.
Another record.
The active listings are hovering around 9,300, which is a little bit higher than what we had in December, which rightfully so, because December tends to be a slow month.
And just pause, side by side, active listings versus the amount of sales, quite a big difference there.
Huge difference. That puts us at about 3 months of inventory right now, which, again, I think what we were kind of predicting was that I don't think we're going to cross over 3, but even if we do, we're still hovering around that 3 mark for the last 3-4 months.
Right.
Which
but January is traditionally slower as well, right?
Yeah. And again, like I feel like we're back to the normal cycle of the real estate.
I feel that too.
Things are going to start picking up towards the end of February, March. We see some uptick in the sales, hopefully, and the active listing because the multiple offers are due to the lack of inventory.
We're really feeling it different, right? So it's going to be interesting.
It's going to be an interesting one. So let's just compare this January to last January. So right now, what we're seeing at 3 months of inventory, last year, January, we're at 0.73 months of inventory. That's when the craziness was happening. And I think in February, we hit around half a month of inventory. That's 2 weeks of inventory, which is...
And that's when the first interest rate hike had happened. So it's been officially a year since...
No, it was in March. March happened, yeah. So when we talk about this in a month, that's when we actually had the first interest rate hike, and then things went crazy after that with all the hikes that we had. And to put things in perspective in terms of average prices, last January we were hovering at around 1,242,000. Right now we're at 1,030,000, let's call it 39,000. And I think in the last 4 or 5 months, we've been hovering around the same number. We've been around 1,050,000, went to 1,070,000.
Yeah.
There hasn't been much of a drop, although this month was the lowest one, I would say, in the last 12 months. But what do you think? Do you think it's going to go up in February?
You're talking about pricing now?
Pricing, average prices.
Yes, I do think it's going to go up a little bit because I'm seeing it different, right? So right now we're filming this and we're talking about last month. And obviously by the time you hear the news also, there's a little bit of a lag. There's a delay in how people kind of digest it.
Exactly.
So we're feeling it like every day.
Because right now we're in February, we're recording it, and the last week I've seen like
last week, exactly. Yeah. So the last week of January, first week of right now, February, we're really feeling it a lot different, where I'm seeing a lot more people, even the open houses are a lot more active. You have lineups again. So there is a lot happening. Yeah. And when I speak to clients, I'm noticing that they're bringing it up to me that they're also feeling it different. So imagine they're not in it day in, day out. Like we do it day in, day out. You're maybe putting an offer. If you're a client, we're putting maybe, 6 offers. So we obviously have a little bit of a one-up in how we're going to feel things changing.
And a few of the stories, I mean, like I had a client that we were supposed to go see something in Aurora. I mean, we should have gone and seen it right away. I think we were on the 3rd day of it and it sold. Like they had 3 offers on it right away. I mean, like we're going to run again.
Cabano.
Yeah, we had a listing in Mississauga that went kind of
crazy. It even surprised us. I mean,
we had in 6 hours, I think we got 23 showings booked. And it went up around 11 a.m. By 6 p.m., 7 p.m. I think we had like a few offers. By midnight, we had 6 offers, I think, and ended up going way over
market value.
Yeah, we're not talking about not list price. Actual market value of that property went over pretty high, which
it took us by surprise. But obviously,
that place looked really nice. The staging one, it was impeccable. We gotta get the stager in sometimes and see what she does.
Yes.
With that being said, another thing that worth mentioning is the days on the market. We're hovering at about 29 days. And at the lowest point in 2022, we were at about 8 days. So about a week, right now, a month. So again, as I always say,
very healthy.
Your house shouldn't sell in 7 days. You know, it's normal for it to take a month to sell, but you got to make sure you price it right. So let's go to the dot chart because that one shows exactly what's been going on with the prices. As we can see, February it peaked at around 1,340,000. We come down all the way to July and we hit around 1,075,000. And we were hovering around there. December it came down, and right now we're, I would say, the lowest we've been in the last 12, I would even say probably the last 15, 18 months at $1,038,000 and it changed $39,000. So again, have we hit the bottom?
I don't know. It's hard to say. But one thing I do want to leave everyone with is now that we have this dot chart up on the screen, you don't look at real estate when you're making a decision about real estate in a moment in time. You really take it and you want to dot chart it and look at it in the last 10, even 20 years to see historically how things are trending. This way you can make an informed decision about your real estate needs, right?
Exactly.
So
wow, look at you. That's a pretty
something I do
good comment. Mention. Yeah, you got to zoom out and see where it has happened. I mean, like even when you go back to the other peak we had, 2017, which prices went crazy. Right now, the prices are still higher than what it was back then. So
prices are still high. Let's just go ahead and say that.
But it's just like the ups and downs get kind of evened out in a bigger scheme of things. And again, if someone is buying for their own need, I would say look at it long term. You're not going to be trading it out in 6 months. So if you buy even right now, goes down a little low, it's not going to be a realized
You're not going to feel it right now.
You're going to be selling it in a few years. So far, if you guys are liking this, be sure to subscribe. And if you think anyone's going to find this useful, share it with them. Click that share button. Let's go down to months of inventory, because something I like to talk about months of inventory is, I mean, we were predicting things are going to be hovering below 3. Right now, we're at 3. We had a little uptick around June, July. But in terms of people wanting to time when to buy, how can you use this chart to figure out when is the best time to buy?
That's a good question. So obviously the months of inventory directly correlates to pricing, I would say.
Yeah.
Because when the months of inventory is low, that would mean that there's pricing pressure for it to go up. And that's one thing to really understand when looking at these numbers, right? Yeah.
So, I mean, you're looking at the graph, when it peaks up, that's when you want to get into the market. When it's at its lowest.
When you're a buyer.
Yeah, you want to be selling at that point when it's at its lowest.
You got it.
And you know what? That's when we saw back in January, February, prices going up. Right now, we're peaking at around 3 months. I mean, it's solid.
We're still in a
seller's market.
Yeah.
So, but way better than what it was last year this time. So that's
way better for the buyers, you mean? Yeah.
For buyers, 100%. So that's something to take into consideration. If you're in the market, I mean, you're going to look at this chart exactly wherever it's peaking is where you want to be buying. Right now, we're peaking again. I would say it's a good time to get in the market, although certain segments of the market, there is
depends.
Very low inventory, and that's the detached market that we're seeing.
Where prices are very stable still right now in this moment in time.
And again, like I keep hearing it, prices are going to go further down. It's come down right now in most areas, 20-25%. What is it to go down another 1 or 2%? It's not going to go down another 25%.
I think people are saying that because of the interest rates, which is very true. Yeah. That's fact, right?
Yeah, interest rates go up, prices come down.
But the indicator that I think why we're basing ourselves on the fact that pricing is not going to come too further down is because of the fact that there are so many people, right? Now, my concern is basically that there's all this pent-up demand of people that have been waiting because of this interest rate.
True.
And they're all going to rush now and get over it and say, oh, wow, okay, the interest rate's not going down maybe anytime soon. Maybe it is or maybe it isn't. But they're like getting comfortable with it. And now they're like, you know what? I need a house, like fact. And so they're going to all charge in and that's going to level prices back up.
And one thing, I mean, like if you like, contact us. We'll do the actual math for it. But as an example, let's take York region. The prices are down for most detached areas in around the 25%. If you're buying right now at the higher interest rate, your monthly payment guaranteed is lower than what it was last year with the low interest rates. So what's the benefit of that? First of all, you're carrying less of a mortgage.
Yeah.
2, you're paying less of a land transfer tax up front. And why wouldn't you want to get into the market right now as opposed to that craziness that was happening?
Yeah.
And again, most areas you're going at it relaxed, although we see some multiple offers. But again, this is why you want to get into the market right now.
Especially the condo market. I think that's
the condo market is a great time to get into it.
Yeah.
And especially if you're investing. Actually, we're going to talk about it in the news. I think there was an article that came out saying a big percentage of these condos are owned by investors. And again, why not? It's easy to get into. The rents are good. And
the rents are great.
Yeah, this has been a solid investment. And the percentage drop hasn't been as acute as the detached market. So let's get into what's going on with a couple of these like sub-markets. So, I mean, overall GTA, we're, again, sitting at around 1,038,668. We're down 16%. But one thing I really want to mention here is how the detached market has behaved since last January and put things in perspective. Because we always say prices have dropped. The percentage here, is combined between detached all the way to condos. But I want to dissect it between detached and condo. So let's get into it. In Toronto, last January, the average price of a detached was sitting at $1,886,000. Right now, we're sitting at $1,486,000. That's $400,000 drop.
Well, where there's obviously the biggest increase is where you're going to see the biggest correction. So super normal.
Exactly. Because again, the prices got inflated due to the lack of inventory. But that is about 21% drop. I mean, like that 400,000 is almost a condo there. So
yeah. And you nailed it. Lack of inventory.
Yeah.
And I think that's the biggest issue Toronto has is lack of inventory.
And it always has been. And the reason we don't see that peak of pricing in condos is because supplies tends to be higher. This year, apparently, there's going to be a lot of occupancies happening.
Yeah.
So anyone wanting to get into the condo market is a great time to do that.
Because don't know how they're going to be able to, feed all the demand, though,
They were talking about there's going to be about 30,000, 40,000 units coming to the market yearly. Which
and 500,000 immigrants?
There's always going to be that issue. York region, the average price.
Wait, what, Nick?
It doesn't add up.
Doesn't add up. The cameraman says doesn't add up.
Guys. It doesn't add up. But like seriously, like 500,000 people coming in per year.
Yeah.
Prices are low right now, but literally in 3 years, we're going to look back and be like, holy crap, I didn't buy.
It's always like that though. You look back and you're like, oh, I should have.
Me and Nick are supposed to pool our money together.
Yeah.
And go buy something because we're talking to a mortgage worker.
Why haven't you asked me?
Well, let's do it. Why not? Like right now, to be honest, I know like in 3 years, things are going to be crazy because people are going to get into an interest rate, hopefully come down below 4%. Things are going to be heating up. So in York region, we're at 1.931. And right now we're at 1,628,000. That's like crazy. We've had a drop of 300,000. That's about almost 16% drop in the prices. Mississauga, another crazy area. The average detached in January was 1,964,000. Right now it's sitting at 1,379,000 and change. Let's call it $1,380,000. That's $585,000 drop.
It was really the time to buy in the last couple of months.
Yeah, it was. I mean,
in Mississauga.
In Mississauga, it's been crazy. I mean, that's a $585,000 drop just in the detached segment, and that's almost 30% drop. So, I mean, again, listen.
Significant.
If you bought it last January, don't feel bad. You're not selling it, so you
and everyone else.
Yeah. So you're not selling it. Just sit down, relax, we'll
enjoy
check back.
Enjoy your home.
Yeah, why not? Like, I mean, where are you going to go? You still are lucky to have a house because a lot of people are still stuck in the
bidding process.
In the bidding process right now. So
Imagine that though, you were bidding, you never secured anything, and now you're like, okay, I can have my pick of the litter.
So Oakville, the average detached price was crazy, $2,498,000, almost $2.5 million for an average detached.
But Oakville's always high because mainly of inventory too, right? There's not a lot of supply in Oakville that comes to market.
Right now there's a lot of supply,
right now
that's why the prices have dropped drastically. Exactly. So funny enough, right now we're sitting at $1,788,000 average price point. That is a drop of $710,000.
It's a whole condo.
It's a whole condo and a half. Probably you could even go a 2-bedroom at that price point with a parking. So you would know. Can I stop looking at condos for a while? But so these are the drops. I mean, like, okay, so going in order, right now we had the most drop in Mississauga. Then we had Oakville, both hovering around 28 to 30%. Again, that's where the opportunity right now is to purchase if you want to get into that housing market. Yeah. Let's talk about the condos. Toronto, the average price last year was sitting at around $760,000. Right now we're sitting at around $711,000. Again, condo market, because of its affordability, hasn't been hit that much.
It still remains the most affordable, right?
Yeah. So they had about
great way to enter the marketplace.
Exactly. So they've dropped by about 50,000.
Not so much.
Yeah. 6.5% compared to in Toronto detached that was at 21%.
Which means it's a great thing to purchase because it's less volatile as well. So if you are an investor and you're concerned about prices coming off, it's optimal for you because you have high rents. You have a pretty secure investment, in my opinion, right?
Yeah.
And so even if rents are to come down a little bit, which they will, guys, they go up, they go down. That's just the way real estate goes, right?
I mean, like,
you still have the appreciation on a great incline.
And the beauty of condo and renting is someone else is paying down your mortgage. And even sometimes I see it, even right now in this market, that the prices are still lower. You might be out of pocket a few $100s, but the way you should look at it is
forced savings.
Yeah, these are forced savings to begin with. And the money you're putting out is technically going towards your principal. So you're kind of like saving that money in the bank. And when you sell it, you're going to release it. So why not do it? Nick, why won't you do it? Do it. You got to get you in the condo market sometimes.
Let's get it, man.
Let's do it.
Let's do it.
So,
sign my name on the dotted line. Let's call it.
We're going to do a BRA right away after this. For York region, which the detached market dropped a lot as well, average price was sitting at around $761,000. Again, very close to Toronto. Right now, they had the most drop though compared to Toronto. It's sitting at $668,000. So the drop in condos in York was more than what it was in Toronto. So the drop was about 12%, so almost twice as much as Toronto. And rightfully so, because downtown Toronto is more supported by the jobs. Everyone wants to be downtown. The transportation is much better.
But a detached in York and a condo in York went down pretty much the same.
Yeah. Well, yeah, detached in York went down by about 16%. Yeah, so almost the same percentage. At one point, York region dropped a lot. I think it was around July. And the reason for that drop that happened was the prices went up too quickly and then they became affordable. When you hit around, I would say less than 1.5 million for a detached, as bad as it sounds, there's still a lot of affordability. People can still purchase those. Going to Mississauga, the average price last year for a condo was about $697,000. Right now we're sitting at $626,000, and that's about $70,000 drop, about 10%. And Oakville is the funny one. Last year was at about $839,000. It actually went up this year to $976,000. So average, the prices went up. Two main reasons. There wasn't a lot of condos in Oakville to begin with last year, and a lot of new condos were finished. And I think because of the higher sell prices of the finished units, the average price pulled up. Because usually in Oakville, there's not a lot of condos trading hands. And since last year, there's been a lot of occupancies that happen, especially in the condo segment. So because of that, I believe the prices have gone up. And it's gone up by 16%, which is really...
it's definitely an interesting time.
Yeah. Wow. Prices in Oakville going up. That's another thing to think about. So let's go to the news and see what's going on in the news.
Let's go to
We had the vacant home tax that we talked about. They extended the deadline. When is the deadline now?
I think the end of the month, the end of February.
End of February. So end of February is the new deadline because apparently no one filled it out. So here's the situation. Even if you're living in your house, you still got to fill it up.
It's not really a vacancy tax. It's more like a declaration, I guess.
Essentially, you got to say, listen, I'm living there regardless of it. Yeah, or not. If you're not, then you're going to get hit by the tax. And
the tax
so you got to fill
that. Come knocking. He's
yeah, that's about
hit
1% of the value, which could be a lot. But make sure to fill it out. Don't just leave it me till last minute because I kind of filled it up end of January. But again, at least I filled it up. There was a news.
Nima, you don't have a condo in downtown Toronto. It's not GTA.
No, it's I have a house in Toronto.
Where?
Anything in Toronto.
Oh yeah.
Devany, what are we talking about here?
Here's a
Just
few
made me homeless. So let's talk about this news that came up.
I want to pull something up. I want to talk about the default rate. Can we call a mortgage broker and find out what the default rate is?
Do you want to call a mortgage broker? And find
I do. Get a mortgage broker on the line. Yeah, I want to know what the default rate is. The reason I say that is because I have a lot of clients that are saying, I'm waiting for foreclosure, and which we don't really have that here. Yeah. We're pretty conservative as Canadians, so we don't really hit the foreclosures. But people are really waiting for the power of sales for the good deals.
Right.
And I think just a good deal is getting something under market value, guys. You're not going to get like those steals.
For sure.
We have a pretty resilient market here in Toronto. And so the default rate, I'm very curious to know what it's going to be.
So calling Ryan from Bespoke Mortgage Group. See what's going on. Bespoke.
Nima.
Ryan.
Yeah, I love him.
How's it going, bro?
How's it going for you?
Good. So we're actually recording an episode. And it's live. So we got a question for you. You ready for it? So Devany wants to know if
what's the default rate, Ryan?
What's the default rate?
Right now, yeah.
Like if,
he's like, what is that? So I guess it's quite low.
People defaulting on their mortgages. Do you happen to know?
I don't know off the top of my head. Full disclosure, we really haven't been seeing much right now or hearing much from lenders or insurers.
Right, okay.
All the insurers are still saying that it's at an all-time low.
Good.
And they have no concerns at all. A big thing to add there as well, if I could add any advice, you guys know I love giving advice, is anyone that is facing any type of payment issues and they do have an insured mortgage, they can apply for 40-year amortization.
Really?
Oh, wow.
Yes.
That's a nugget. Thanks, Ryan. That's
great.
My pleasure.
So if you have an insured mortgage, you can increase it to 40 years.
Yes. There is an application process. You do have to go back to your existing lender and they send it up to the insurers. But if you are having trouble, you're in a variable rate, your costs have gone up immensely, you can apply. And a lot of people have been successful at obtaining 40-year amortization on their existing mortgages.
Love it. So if anyone wants to reach out to Ryan, maybe see how they can increase that amortization to 40 because that could help a lot with the payments.
We'll leave his handle below.
Yeah, we'll leave the contact below. Ryan, thanks a lot, buddy.
Thanks,
I'll be in touch. Have a great day. Bye-bye.
Okay, bye.
Bye, Ryan.
So that was good.
There you have it. That's great, honestly. So a little piece of advice, if that's you, you know that you have some options.
Yeah.
But I think one of the main reasons, the takeaway from all of this is the default rate, we don't foresee it going so high because people qualified with a stress test, right?
Yeah.
So whenever you did apply for your mortgage a couple years ago, whatever it is, it's kind of where the mortgage rates are at right now.
Yeah.
So
yeah, that's actually a really good point. So another piece that was in the news was Toronto started saying more than 1/3 of Toronto condos are owned by investors. That's a StatCan finding. So that's about 36% of the condos are owned by investors. And again, why not? Because great price point to get into. They rent very well, and the rents are at almost all-time high.
All-time high.
So it's the
perfect time.
It's a perfect time to get into it, and we got more condos coming up. And if anyone wants to get into a condo segment, you can do pre-con, you can buy assignments. There's so many ways to get into it easily at a lower cost than detached. Prediction.
Yeah.
Let's get into the prediction. What do you predict happening?
So, we talked about it a little bit. I do think prices are going to creep up ever so slightly. And, the pent-up demand for me is a big one. But also, I'm basing myself on the multiple offers that we're seeing in the marketplace at this time.
Yeah.
It's real and it's happening. So that will cause pressure on pricing to go up.
Because we used to see like, homes selling and like, selling around the same price or sometimes lower. Right now, what we're seeing is like, again,
over list price.
Yeah. It sells, let's say for 1.3, the next one is selling for 1.35. So,
and that's the new price in the neighborhood, right?
Yeah. So, I mean, I know with Nick, we ordered a little crystal ball. When it comes, we'll tell you exactly prices are going to go up.
He's funny these days, Nima. I love it.
Shipping delays, man.
So till then, we'll figure something out. And that's why we're predicting, not the crystal ball. One thing I think we want to talk about is if anyone's in the market for assignment deals. Because we've been seeing great assignment deals. People like actually selling them at what they purchased it for 5 years ago, or even sometimes below it. We've got a good WhatsApp group happening that we send all the deals in there. So
handpicked deals, right? That we would purchase.
Yeah, these are handpicked deals. It's not just any assignment that we see. These are deals that are like amazing.
These
like,
are really hot deals. Yeah.
So to get into it, be sure to either reach myself or Devany on Instagram. We put the Instagram handles down below. And we will get you into that WhatsApp group so that we can
find you that hot deal.
Yeah, and the deals are ranging anywhere from 400,000 all the way up.
All the way up.
Yeah, and one great deal that we saw was on a townhouse recently. It was, I would say the value is around 1.1, 1.15, sold around 900,000, which is amazing for a condo townhouse near Bayview and Eglinton. Brand new condo townhouse with a parking, and it was a 3-bedroom. So with that being said, if you're finding these information useful, hit that subscribe button, share it with your friend, and also share it with anyone that you think is going to find useful that WhatsApp group, because I think there are going to be good deals there.
And the time is really narrowing in on these hot deals.
Exactly. As you said, a lot of these deals are last minute distress sales. So it could be a great opportunity for someone to come in and help someone else. Yeah. Anyways, thank you for watching.
Have a great day, guys.
See you next time.